Hey there, Russell traders. David here of TradingFibs.com to bring you the Russell recap for June 14th, 2013. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only to support your knowledge in the market and see what is going through my head on any given day, like today. Always make sure you have a solid trading plan and never move your stop when placing a trade like I did today and was able to take some profit. Let's jump right into our indices today. Our four major indices, ES, YM, NQ, TF, all rising at the market open, chasing those daily gaps and open gaps above, closing some of them, and coming back down through the open ranges, only to give us a nice downside entry, chopping it up on the lower open range on the TF. NQ retesting the 25-minute open range in the mid-morning West Coast time, lunchtime on the East Coast. ES chopping it up at the lower open range, and again diving with some of the following suit on all of the other indices. YM pretty much stayed clear of its 25-minute open range and was all under the action today. What supported these moves to the downside was our market internals. Market internals on the overall market really chopped it up, green and red, all up and down all around. Advance and decliners came down underneath zero, with the market breadth holding all the way down to negative 248. Not a very strong number, but at least we had a 2-to-1 on the NYSE, negative 2.5 on the NASDAQ, which brought about some selling. And looking at the market internals for the Russell only and the AD, and the market breadth showed all to the negative side. This, folks, is what kept me in my trade today. This is what kept me with my stop in place and allowed me to take profit all the way down to the Camarilla Cam L4 target today. So let's get right into that and see the decisions I made. Notable lines of resistance to the downside included the weekly pivot, the daily pivot, and the 1 hour open range, and my Camarilla lines. Again, in the morning session at the market open, as price had started to punch up, call in the trading room and on StockTwits and Twitter for a call to the upside if we had broken above, but price really never broke above the 25-minute open range here. And then the call to the downside, looking at the entries and where to take profit. 25-minute open range on the Heiken Ashi was my first target, was my first entry, here at approximately 747. Price had started to come under on the 25-minute open range. I knew it was going to be a quick one as the weekly pivot was close by. So I had a EMA crossover already here. On my 4 EMA, I'd already crossed over in the middle of the open range. Again, this is a different trading style. If you just trade on the crossover, the EMAs would have taken a nicer profit here. But again, as the morning session continued, you could see that the EMA just went up and down, and that would have taken a lot of chop of in and out. So my technique is, as long as I have the EMA crossover confirmed on both charts, I'm underneath my 25-minute open range. My market internals are supporting my move to the downside. I am in the trade with a downside target and quickly taking contracts off of the weekly pivot and price coming back up and actually taking me out. So trade number one was approximately around 10 ticks and quick in and out. Question was, when do I re-enter the trade? And that is one of the things that we go through in the trading room. Just because we came out our 25-minute open range and we missed that, maybe we missed that opportunity, when can we get back in? And one of the things I want to go over is why I actually wouldn't have gotten back in at certain points where momentum did come down underneath the 25-minute open range. However, that is not the trade I took today. I actually got into the trade again once price started coming back down underneath the 25-minute open range, and it was a question of where I put my stop that allowed me to continue in this trade. So let me first talk about why I would not have re-entered until much later in the morning, which would have been about 2 hours later. As you can see, price action came above the 25-minute open range, came down. Weekly pivot was holding the line. So there's my first line. I'm also looking at the 1 hour open range down here at 980. So 980.3 and 980 are my lines of resistance to the downside. Unless I was to break these two lines with some momentum, including a Heikin Ashi, there was no way I would take a re-entry. So here we could see that the EMA was just bouncing all over the place on the lower 25-minute open range. So absolutely no trade here. The first entry you might have started to look at was right here at 2 hours post time. Is the EMA is under. The EMA is under here. The 534 and the 4 EMA is under here. Let's get a little tighter shot on this. All right, so we're looking here. This is a Heikin Ashi tail. Most of the bar is underneath the 25-minute open range. Over here at 8:30, 2 hours post-op time, post-market open. But again, this bar, 980.3. I have a 980 down here on my 1 hour open range, and they are no way near. The Heikin Ashi bars have not cleared that line, so I would not take that entry. So that would what I had called setup number 2, and that would have been hands off. Price action on the Heikin Ashi came above once again. So here we are with a third setup, setup number 3. So price action here at 8:45 Pacific Coast time. I am on the bar 8:45 here. I'm looking at 980. Remember, 980 and 983 are 980.3 are my lines of 980 and 980.3. So the only way I'm taking a trade or a re-entry is if this bar here, were the majority of that bar were to close underneath 980. As you can see, it did not happen. So this is setup number 3. That would have not put me in the trade. As you see, price action really bounced up and down here above the 1 hour open range S1. And all along the way until we finally get to right here at 9:50 Pacific Coast time, moving along on the Heikin Ashi. I get solid tails. I've broken under 980. I've broken under 980.3. Market internals are in the red. I got CAM. Apologize. I keep calling this chart CAM, but it's my 4 EMA. 4 EMA is tucked under the other 3 EMA. So I got the 5 under the 13, the 21, and the 80. That is a go. And so that would have been setup number 4, which you can catch in my blog site. I'll put a chart up there so you can see the 4 setups. But this would have been trade number 2 if you were to take this. And you would have taken this down. EMA crossover would have kept you in the trade. And the first downside target I would looked at would have been the CAM L4 down here and gotten out of the contract. And as you can see, my stop had been up. This was actually, I'll go through my trade in a minute here, but I took my trade off in that area of CAM L4, which happened to be at 976.4 and 976.4. So that would have been around in this area here. All right, so that would have been the 2 trade setups. Trade setup number 1 at the first breakdown, and then I would have avoided all this chop, and then I would have re-entered over here on the 950 bar using the Heikin Ashi and the EMA crossovers and market momentum. Now, what trade did I actually take? Well, I had gotten back in to the trade back here, and I had placed my stop at 983.5. 983.5. Why did I put a stop so high? Because I felt, and I'll tell you, it came close, but I put a stop above the pivot because price action was bouncing up here. Price action was bouncing at the CAM L3, and I gave it a little bit of room here. Looking at my market internals to the downside, all in the red. If I come back here and look at all this, this is all red. I got a negative AD. My negative, I was at negative 1,000 already. And market breadth was all under zero here. I wanted to give this a little bit of room, but I believe that the market was going to come down further, and so giving the room a little bit of market to run. I placed my won't catch here, so giving myself a little bit of room above the daily pivot, above the CAM L3 here, and again, came pretty darn close, but then eventually market came down and I was able to take my contracts off and kept the runner on, actually I took both my contracts off at the bottom, and price continued back up and on the EMA crossover to the upside. So not a picture perfect day, but I didn't move my stop. I kept my stop in place. I'll post some charts to show you exactly where my stop was. I did not move that, and that's what stopped me from taking a loss today. So I almost had a little bit of loser today, but I was saved by a wide stop. Again, that might not be everybody's trade management style to have such a wide the ability to put a wide stop on, but if you are able to do that, giving it some clearance above that daily pivot, and CAM L3 would have been the answer where to put that. Otherwise, you might have been taken out here for a little bit of a loss, and then you would have avoided all this chop action, and you definitely would have gotten in under the weekly pivot. That's what I called in my trading room, and that was the move to the downside, and that first target right here down at the CAM L4. And actually price dipped a little bit under that, but really never came back down till the end of the day. So not a bad trade for a split contract day between June and September, rolling out the June and starting on in September. So that's it. That concludes today's wrap. Feel free to drop by tradingfibs.com or any of my social media outlets to obtain more information. My trading mantra of know one thing, know it well, rings true for all markets. That's why I know the TF. That's why I stayed in the market today. Just know what you're trading. Know your ES, Apple, whatever it might be. My plan will always keep you disciplined. You can find me every day on Twitter at tradingfibs.com. You can follow me on StockTwits. And as always, I just leave the figuring out what's going to happen tomorrow to the experts. I trade what's in front of me on my charts. I always have a stop. Till next week, happy Father's Day to all the fathers out there. Have yourself a Blue Zone day. I'm out.